But at the end of the day, reality matters. And even the World Bank was compelled to put in their handbook that for millennia, gold has been a store of value. It is something to hedge against inflation. And this is happening today. And there is investment demand for gold as a safe haven and an inflation hedge today.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials from March 25th through April 1st, 2024, while supplies last. First, we feature 2023 1-ounce Silver Krugerrands at $3.10 over spot. We also have backdated 1/10-ounce gold Canadian maples at $35 over melt with a minimum order of 4. And finally, we're offering our choice 1-ounce Palladium bars at just $119 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always privileged to have this widely followed returning guest. Lobo Tiggre, also known as Louis James, is the Independent Speculator from independentspeculator.com. He joins us this Tuesday, March 26th, 2024. Lobo, thank you for coming back on Liberty and Finance.
Thank you, Dunagun. Elijah's father.
Yeah, that's absolutely right. In fact, it's a very interesting watch. The reveal video that we did about 2.5 years ago when Elijah joined our channel, that we were in fact related, that I am in fact his father, and that how he actually was the one who caused me to get involved in both preparedness, gold and silver, sound money, all of that through his curiosity and questions as a homeschooler are, I think, a very interesting watch. I can put a link to that video in the description of this video for those who are interested. I think it's interesting to many of our subscribers to figure out the connections that led us this pathway. And I guess that's something that we'll probe you a little bit about at the end of the video, is how you got involved in what you do. But first of all, I'm hoping you could bring everyone up to date with your macro view of the environment in which we find ourselves, because it's highly confusing to many that many of the analysts that we've been interviewing for years and quarters and months, as we lead closer and closer to perhaps a very significant event or series of events in our financial lives, have been calling for and expecting some major volatility in the markets, some major stresses, and perhaps failures on banks, etc., and perhaps a plunge in the economy. Whereas we're hearing from officialdom sort of the same things we often do, like the banking system is sound, the economy is strong, the consumer is strong, and you were just updating me on your latest views on whether we're headed for a hard landing, soft landing, or perhaps something else that we're being pitched. Can you talk to us about how you see the macro environment and how that is influencing your positions and your actions? Because I understand your site is all about actionable intelligence. So help us understand what your view is and how that informs your actions.
Yes, if you want the big, geopolitical background for all this stuff, maybe Jim Rickards is your guy. Or if you want the theoretical underpinnings of the various metals, some mining engineer or geologist is your guy. I'm a speculator, and I'm all about, never mind what's inevitable or ultimate, and this inevitable or even imminent. And this is directly related to your question. I want to know what's happening now, because this. The collapse of the financial house of cards, or even the global economic order, has been imposed on the world really since 1971 and with precedents before. Your audience is familiar, but how many years can we be told, okay, this is it, this is the year it's really happening, before you get kind of tired of hearing that? So I don't want to throw anybody under the bus. I just want to say, I'm just not in the prediction business. I just want to look at what are the trends that are happening now that are investable. And then I go there. So that I guess addresses several questions. And Elijah's audience, yours maybe casually as well, will know that I'm still in team hard landing. That's not new. I think what is new is that we are starting to see, despite the narrative shifting from team no landing, really now team soft landing, now morphing to team no landing. They are doing victory laps. Everybody's saying, if we haven't had a recession by now, we're not going to have one. Everything's fine. This time really is different. That drumbeat is getting really loud. But at the same time, the data is actually starting to come apart. We've got inflation going the wrong direction, which Powell now says is just a bump on the road down. It's striking to me. I'm not a conspiracy theorist, Dunagun, in really in any useful way of that. But you can't help but notice certain things. Like immediately after Powell's remarks, a lot of the talking heads on financial media were going on about how, as Powell says, there are these bumps on the road. Powell hasn't been saying that. That was new. That was the first thing. No, the second thing I noticed in that press conference he gave is that this is the new Powell speak is, just bumps on the road. It is a dismissal of the data he says the Fed is dependent on. That's significant. And it just seems like, Bloomberg and other financial mainstream outlets are just like, this has always been part of the narrative. It's like Orwell, 1984, where they don't just change the guys, they erase him from history or they rewrite the past news articles so you can look back and say, oh yeah, they've always been saying that. I'm not concluding, therefore, I'm not saying I've proven a conspiracy here, but you just notice patterns like this and you have to it is rational to at least scratch your head and be skeptical. So when the narrative on the mainstream is such a consistent drumbeat, and suddenly within minutes everybody's saying the same thing, you don't have to believe that aliens are behind it all or whatever to say, look, there's something here that doesn't smell right in Denmark, and therefore we need to be cautious. I think that is a reasonable conclusion to draw.
Yeah, I wanted to interject there the phenomenon that you described, because we've seen this in the preparedness or risk assessment arena for some time as well, is that you don't just get rhyming or similar statements as though a team were each expressing a common sentiment in their own ways. You get verbatim sound bites across all major mainstream financial outlets, whether it's online, whether it's cable, whether it's broadcast, whether it's print, within the same day.
I've seen that too. Somebody did a YouTube video like pasting ABC, CBS, NBC, CNN, blah, blah, blah. And everybody with the same, I forget what it was, the phrase of the day, right? Just like, wow, it's not reasonable to conclude that that's an accident. That doesn't necessarily mean there's a grand puppet master who controls us all, but the memo goes out, right? Somehow the memo. But the point of this one is that there is a drumbeat like that right now for no landing, everything's fine, pay no attention to the man behind the curtain. Even while we do have inflation ticking up, which is now just a bump on the road down, right? And we have signs of cracking in the labor market. The JOLTS numbers are trending down now for months. Inflation, not only is it popped up in the last month or two, which you could dismiss as a bump, the longer trend is almost a year now of sticky sideways inflation at plus or minus 4%, 3%, depending on which number you're looking at. That's not just significant because of the length of time. Like that's a long time to say, oh, it's just a bump or something, 9 months plus. That's most of a year of it basically going sideways. That's sticky, that's stuck. But particularly important is that as you get to the year anniversary of that, your base effects go away. Like if inflation was higher the year before, this year's number has that extra hurdle to come out even higher. And that's about to go away, which is going to make it much harder for even official, manipulated, whatever you want to call them, statistics to come in as even at the levels that they are. But it's not just that. You've got the credit card delinquencies. You've got, the commodities recession. You've got gold, which tends to lead, not correlate. Like people like to point out, the correlation between gold and CPI is terrible. Well, in the first place, CPI is a load of dingo's kidneys. In the second place, gold leads. It's when people start seeing, oh, heck, something bad is coming. Something wicked this way comes, right? Gold leads. We saw that in 2020 before the inflation. It's Anyway, I don't want to get too far off the track. The point is that there are multiple indicators, except for the supposedly strong labor market, which, the unemployment, even that unemployment rate is inching up a little bit. And if you look at the labor force participation, it tells another story. So there's all these signs of cracks in the narrative, and yet the drumbeat is getting louder. I think if nothing else, I think that does tell an audience concerned with both liberty and finance that this is not the time to give up, right? If it's darkest before the dawn, which I don't think is actually true as a physicist, but let's go with Lord of the Rings on that. If it's darkest before the dawn, this is that dark period where the other side is claiming premature victory. I'm absolutely convinced that's wrong. And even, sorry, one more thing. My friend Adrian Day likes to point this out and give credit where due. He's absolutely right about this. The average length of time between policy change and the impact on the economy, particularly tightening and the recession, the average length of time is about where we are now from after when the policy tightening happened. There are different numbers I've seen ranging from 18, typically 24, a high of 27 months, which would be like this June. So even, never mind the media parroting the same phrases or these other things, just that one number, that's the main question, recession or no recession. And all these people saying if we haven't had one by now, we're not going to have one. That's just simply incorrect. The history of recessions is that we're just now getting into the average length. It's not even overdue. We're just at the average length of delay right now. It would begin to be overdue starting in July and later towards the end of this year. If there's no recession by the end of this year, then I think we really could start to lean towards the it's different this time story. But even then, in a post-pandemic, massively distorted economy with all these stimmy checks and all these crazy things they've done, it's possible that even if there's no official recession this year, that it's still not necessarily a done deal. Anyway, what's happening now is that the data is starting to fray, and that causes me to double down on my hard landing call, and therefore I'm very bullish on gold, particularly silver after a lag. Yes, even Darth Silver, they call me. Even Darth Silver likes silver this cycle, but gold first and foremost now. This year, if I had to choose, I'd go more on gold than silver. And almost everything else is completely off the table, Dunagun. If I'm right, I may be wrong, but since I think we're headed for a hard landing, no oil, no lithium, even it's on sale, no copper, even though I love that for decades to come, nothing else besides gold right now, with the one single exception of uranium, because it's not perhaps entirely immune to a recession, but it's very recession resistant. It's a baseload power that you want, even if you're pulling back your horns and everything else, not flying so much, not traveling so much, you still want the lights to come on, especially at hospitals or airports or things like that, which is what nuclear excels at. So that was a bit of a long-winded answer, but the macro leads directly to what to do now. And I'm very focused. I'm not just a gold bug. All kinds of metals and mining and minerals, and not really agriculture, but natural resources. And my focus this year is just the two yellow metals.
Now, it's interesting that you're focusing on the metals. Many people are pointing out a near record ratio of metals prices to the mining indexes. What are your views on the miners of those metals at this time?
I think that's well spotted, and I think that's actually part of the opportunity. When I say that I'm focusing on gold, I'm not necessarily going down to the coin shop and buying another Buffalo every weekend or something. I buy bullion. I accumulate bullion whenever I can, whenever I have savings to put away. In that sense, I'm a stacker like anybody else. That's not a speculation in my view. I'm not buying it because I think the price is going up. I'm buying it because it's gold. And, if things get really bad, it will still be gold and I'll still be able to use it. If the internet goes down, my memory drive with all my other wealth might be useless, but my gold will still be liquid. And, so don't confuse that with an investment thesis. That's just, an always on savings principle that I have. So when I say I'm focusing on gold and uranium this year, I mean the stocks. I'm buying those to speculate on hockey stick potential. So to your question, you'd think with gold at nominal record all-time highs. By the way, a real all-time high would be north of 3,400, and that's just using the CPI. If we use shadow stats or something else, it would be, twice as much. I don't even want to say the number out loud because it sounds crazy, but 3,400 is actually just the 1980 peak adjusted for the government's own statistics. So if that is where we're headed, the stocks should really deliver leverage. And they haven't been lately. They've been underperforming, which has some people pulling out their hair, saying, oh, I give up, I'm disgusted, blah, blah, blah. Dark is before the dawn again. I actually think that's the opportunity. And I understand I think I understand why it's happening. In gold spikes in the past, in 2011, even 1980, there's spikes, and it comes crashing right back down again. In 2011 took a while. I mean, the spike didn't last long, but then it was still like over 1900 was intraday. Around 1800 lasted for a while, but then it fell off of a cliff that just didn't stop hurting gold bugs for 5 years, 5 long, painful years. So I understand that that's not just recency bias. That's actually all the history of gold since it was separated from the dollar by Tricky Dick Nixon in 71. So if that's what gold has always done when it has gone on a big, surge, it's not crazy for people to say, oh, well, the next big movement is downwards. And so I think the gold stocks have actually been leading gold down. But the issue there is that I think they're wrong. Like it would be if they're right and I'm wrong, gold falls off a cliff next. Bidenomics kisses the boo-boo. We're all fine now. And we don't need no stinking safe haven assets. Never mind the 2 hot wars that could become World War III going on in the world or anything else. Sorry, I'm being facetious and maybe I shouldn't. I mean, those are real, and that's not something anybody can ignore. But maybe even more important for the gold-dollar exchange ratio, which I like to call it rather than the price of gold, because gold is money, so it's a forex question in my view. The gold-dollar exchange ratio has done well despite higher interest rates, despite normal headwinds for gold, evidently because of central bank buying. Not in the West, of course. The global South, the East has been buying. So even if Team No Landing is right, that's not going to stop central banks from buying. Everybody who had that rude wake-up call when the U.S. weaponized the dollar, they're not going to suddenly decide, oh, everything's fine now. We're okay with New York and Washington controlling our financial lifeblood. That's a one-way change. So even there, it's hard for me to see anything within investable horizons that's terribly bearish for gold. But let's say I'm wrong. I don't see anything, and we're still heading into a rate cutting cycle. If nothing else, we're still heading into a rate cutting cycle. And that's always been bullish for gold. In fact, I find it very encouraging that this last week, as you and I are recording, we just had the Fed's decision, and that had a very positive impact. That's what took gold to this latest nominal record high. So, that's not other central banks. Other central banks weren't waiting for the Fed, and they're not buying gold because the Fed did this, that, or the other. They're buying gold because it's not the dollar. And they want to diversify out of their dollar holdings. So I think it's really interesting that in this environment where central bank buying has been propping up gold for the better part of a year, now we just saw a new source of buying. Now we saw people who said, holy cow, the Fed really is pivoting. Even with higher inflation, the Fed is still talking about pivoting. It's stuck by the three cuts this year. Barely, but it did. This suggests a new buyer to the market that hasn't been there for a while, and that's very optimistic for me. But anyway, sorry, I'm being long-winded again, Dunagun, but the point is that it makes sense to say, well, gee, why are the gold stocks relatively cheap? Or I would even say absolutely cheap. If you price them in gold, they're dirt cheap. Why are they so cheap with gold at record prices? Well, this is because, as I'm saying, it's not just the recency bias. The history of gold spikes is that it comes down. The so-called smart money in the sector, or the people that even bother with gold at all, have been leading gold down because they expect gold to come off the spike. I think they're wrong. I think gold keeps going north. And when they realize that, the alligator jaws in that chart snap shut with the stocks coming up rather than gold coming down. And I see that as a terrific opportunity, and it is a top priority for me personally right now to put more money into play based on that thesis.
Could you contrast for people the choices that face them in that arena between the proven majors that perhaps legendary players like Warren Buffett and others may have been favoring recently versus others that you might lead people to consider as well as a speculator?
Sure. Well, there's a spectrum. And again, bullion is a completely different thing. I buy bullion whenever I can. It's not a question. That's savings. It's not a speculation or an investment. As a speculator, then I have to ask myself, what kind of investor/speculator am I? If I'm retired on a fixed income and I really can't afford to risk my nest egg, then maybe I don't even bother with the producers. You use the word proven, which I kind of smirked at, because even the biggest, best mining company in the world is subject to massive, sudden, like huge changes in their underlying value. Even companies like Vale and BHP can get hit with those floods in Brazil, billions of dollars of hits to their financials. The big gold players, Barrick and Newmont, they get, an endangered mosquito gets discovered on some key property, and suddenly it's this huge hit to them, and they haven't even done anything wrong. That's just, the market is that volatile. I think, if I remember correctly, Messrs. Graham and Dodd even said in Securities Analysis, somewhere in there in page 5,374, if you were still awake when you got there, I seem to recall them saying that the whole business of mining was not suitable for Graham-Dodd analysis, because it was the underlying commodities were just too volatile, making the securities just, speculation. So if I'm very risk averse, or I cannot afford to risk my nest egg, I'm sounding Irish today, then I might even just go with an ETF. Forget the producers, even the biggest ones. Just go with an ETF. I can, not as bullion to save, but as a speculative investment on that, price movement or the Forex movement between gold and or silver and the dollar. If I'm a little bit more, daring, then yes, the big, more stable producers are a way to get extra leverage to gold without necessarily going whole hog on the risk spectrum. I don't actually see the mid-tiers as between the junior explorers and the major producers. I kind of see them actually as the worst of both worlds. There's more risk to them, but they're actually miners, so they actually need to deliver to the bottom line. They're held accountable for things that the juniors can get away with. So it's kind of, the reason to go there is if you think somebody in that middle space has great assets and they're likely to get taken over, which is a common theme in this space. But just as a principle, I don't see mid-tiers as a middle portfolio option. I think you're better off with a barbell. Some of the big boys to hold down the risk, and some of the smaller juniors to give you that hockey stick potential and balance that way. And if you're 19 years old, no kids, then maybe you skew more towards the junior end of the spectrum, try to get more of those big wins, the mythical 100 baggers. I got to say, Dunagun, I've never bagged 100 times my money on a stock. Doug Casey, my mentor, did 3 times that I know of in his career. This really does happen, not just in cryptos. Hopefully, I'll have a Doug Casey story to tell on this. I think my highest gain so far is about 25x.
Well, part of that gain story depends on when you sell, too. It depends on when you enter. And Rick Rule often talks to us about that contrarian mindset of entering when things are hated, entering when everyone's getting disgusted. You've talked about just a few moments ago, you talked about even long-term stackers and investors in the metals have gotten demoralized and beaten down over the past decade and a half. And they're, many of them are worn out. Some of them are just say, hey, I'm getting too old for this. I've waited all the time I have. I don't know how much time I have left. So, there's the sentiment, aspect of being a contrarian entry point, but then your exit point. I mean, Warren Buffett again is quoted as saying, when people ask, how do you have such a successful track record? He always said, I always sell too soon. And that idea being that when you have a profitable exit point, no one can fault you for taking that profit.
Well, they will, But as the saying goes, nobody goes broke taking profits, right? And better too soon than too late is absolutely true when it comes to investing, and particularly speculation. But I have actually, there's a free report on my website, if you don't mind the mildly crass commercial message here. But it's free. There's a download. It's called the Upside Maximizer. And this is my evolved take on Doug Casey's sell half on the first double. Speculation is so volatile. It's so risky. His formula has always been, you get a big win, sell half, ride the rest, free of risk. Can't get better than that. Makes sense. It's simple. But to your point, you can't be criticized. Well, yeah, you can. I know, because I got the criticism. People hated that. When something went on to become a 10-bagger, but if you sold half on the first double, you turned your 10-bagger into a 5-bagger. Those are they're not once in a lifetime experiences. Fortunately, in the mining sector, there are 10 baggers every year. But nobody knows which ones are going to be in advance. Not everybody can be Doug and Rick with such a wide net to catch so many of them. So my evolved version of Doug's formula is instead of taking your first double on a stock and selling half, is you put a sort of stop loss on it at that point. Not as a stop loss, but you ratchet it up as the stock continues to ride, and then if it rolls over, you sell. It's not a stop loss; it's a stop gain from turning into a loss. I call it that's a mouthful. I call it the upside maximizer. There's a free report on that on the website. Anybody wants to download it, they can check what I mean. But the point is that yes, it's so hard to find these winning stocks that when you've got one, it's just painful to get out too soon. So hopefully that will be helpful to the audience.
It is remarkable. Now, you've mentioned a couple of times about globally central banks accumulating gold, and it's interesting how far gone the American investing public is in terms of following like trained puppy dogs behind the mainstream financial media and listening to the jawboning by either the Fed or by members of the Federal Reserve or the Treasury or whatever, talking about how the economy is so strong or how things are unexpected. We've got inflation in hand, or this is going to be transient or transitory, or whatever. It's remarkable how much just the talk can influence people's actions. Your view of that dichotomy between talk that's happening in the West versus actions that are happening in the East.
Well, actually, that might be something about to pivot. I understand the question, but it was striking. This wasn't my discovery. Somebody I follow on Twitter, Jan or John, I don't know how he pronounces his name because I've only seen it in writing. He pointed out that the World Bank has just published a handbook for how money managers could deal with gold. So this isn't China or India or Russia. This is the World Bank, and the fact that they are doing this now, a Western-led organization, I think is really telling. The demand must have been there for this product. But B, the fact that they felt compelled to explain to supposedly professional money managers how to invest in gold or how to help people, make use of gold. Basically a generation or two of Western financial elites are ignorant about gold. They've been taught it's a barbarous relic. Bernanke famously, with that vein pulsing in his forehead, said, "Oh yeah, we only keep gold in Fort Knox for tradition," right? So in that world where that's the narrative, and that's what your professors teach you at the most prestigious universities when you study economics and finance, these people are ignorant. And the World Bank felt compelled to put out a handbook on how to buy gold for professional money managers. I just find that gobsmacking and an interesting sign of the times. Maybe this isn't where you wanted to go with this question, but it strikes me that ultimately, at the end of the day, reality matters, Dunagun. Right? And you can have your narrative, you can spin it however you want, but at the end of the day, reality matters. And even the World Bank was compelled to put in their handbook that for millennia, gold has been a store of value. It is something to hedge against inflation. And this is happening today. And there is investment demand for gold as a safe haven and an inflation hedge today, even in this Bitcoin world, and even, post 1971, we don't need no gold anymore. Reality does matter. It's like, and by the way, I'm not a Republican. I'm a anarchist, crazy libertarian type. So when I beat up on Biden or the Democrats, it's not because it's all GOP. I'd rather be impartial, independent. But, you look at Team Biden and they're pulling their hair out over why they don't get credit for Bidenomics. You look at the official numbers and Bidenomics, this is the best economy we've ever had. Sounds like Trump. We've the best economy we've ever had, right? And the people just aren't buying it because reality matters. Here's a striking thing. Just yesterday, there were reports all over the place. I tweeted this. Larry Summers, of all people, who's a Democrat. He worked for Obama. He was his chief of economic council or whatever. He's a leftist Democrat. Even if you listen to some of his social pronunciations, I would say quasi-socialist economist. But he seems to have some intellectual integrity. Like he's trained to look at the world in a certain way, but he's trying to look at the facts. And he criticized the Fed resoundingly when they were talking transitory and ignoring the risk of inflation as a Democrat. So I thought that gave him props for not just being on Team Biden on that, right? And then now, just yesterday, he came out with basically an admission that John Williams from Shadow Stats is right. And he said that in 2022, inflation was 18%, if you look at it the way the government used to calculate it. Now, of course, they're not going to say, therefore everything else that we critics of the government will say. But it's really striking to me that this Democrat, apparatchik, comes out and says, yeah, inflation actually was 18%, the way, not the way Lobo the anarchist calculates it, but the way the United States government used to calculate it. So this is relevant to your question in terms of like cracks in the narrative. Like that is a huge, wide, gaping hole in the narrative for somebody on who should be on Team No Landing side to say, hey, there are real issues here. And that brings me back to my answer. Won't repeat it too many times. Final time. Reality does matter. And dear audience, don't pull all your hair out. What's left there, leave some of it there. You'll get a sunburn. Reality does matter. You're right. They're wrong. And I don't, maybe I'm hallucinating. I don't do drugs, but I think that we'll be shown to be right before too long.
It's interesting because what you've described could either be looked at as too little, too late. It's like when there's been a consistent mantra of lies and spin and renaming and calling things the opposite of what they are and denying and saying we don't expect this. Oh, that was a surprise, etc. For so long, we have some sayings we use on our channel like it's too stupid to be stupid or it's too stupid to be a mistake, when the ordinary person on the street who has none of the credentials can just see with their own eyes and feel with their own gut that they're being lied to. But when you do see, as you call them, cracks in the wall or cracks in the narrative,
glitch in the matrix, even.
Yeah. Yes. And one way of interpreting that is that it's becoming too obvious to be denied. It either you could take the most charitable view that these people have overcome, as you've described, overcome their training, overcome their lack of preparation for this to where even they are coming around to it's breaking, reality is breaking through into their perception. Or there could be a more cynical interpretation of there's some CYA happening where some of these organizations are saying, let us not, when the thing really blows up and when people really get hurt, let us not be told, well, you never warned us, because at least we did tell you that things would be a good idea.
Yeah, it's a tail risk. There's this small possibility. And the last interview I saw with Summers, he did say that a hard landing was still there. Like he didn't ascribe it very high odds, but that was one of the potential outcomes. So in the future, the interviewers can say, oh, gee, Larry, how did you know? You gave it a 0.00015% chance. You're such a genius. He didn't say that. I think he said something like 15%. But yeah, the other example of this that really struck me was the Harry Potter reference here would be the female teacher of the school who looks like a toad. I can't help it. I don't mean to be ad hominem, but that's what I think every time I see our Secretary of the Treasury. And, she goes on TV and says, yes, in hindsight, I regret having used the word transitory. Well, you know what? I happen to have a sword here. You should fall on it, dear. You don't just get to say, oh, oops, I'm sorry, and then remain in your job and keep going. That level of gross incompetence and or villainy, it's either fools or knaves. Neither is good for us. Right? Failure on that scope, heads should roll. She should quit or be fired. And everybody said the same thing, should be fired for gross incompetence.
And broadening out that same thing, looping back to what we were talking to about the mainstream financial press, that level, if it really can be negligence on that broad of a scale, though, where has journalism gone? If no one could see this, if no one could call that the emperor has no clothes on this long, really? And yet these are the same institutions and individuals that are expecting and hoping for people's trust going forward. the full faith and trust in the United States dollar and in those who are at the helm of stewarding it. For people who don't care to grant them that much trust, one place they should go is the independentspeculator.com. Can you tell people what they'll find there?
Sure. Well, thank you for that. The simple answer would be is that we have a free weekly newsletter. It's email only. That's our gentle way of collecting email addresses. And you can subscribe, see what I think, see if you think my type of analysis will be useful to you if your goal is to make money via my paid services. But if not, we welcome you to the free service. The one promise I will make, because I could be wrong about many things, but the one promise I can make categorically is if you sign up, we will not spam you with a flood of daily advertisements. I hate that type of marketing. You get one email per week, and anything else is up to you.
Well, we're so grateful for your presence here, Lobo. It's been great to see you at the major conferences where we've come across each other in person, and looking forward to seeing you again in that venue as well. But always appreciating, on behalf of all of our viewers and our subscribers, your recurring visits here with our audience on Liberty and Finance to keep us apprised of your assessment of the environment that we're in currently, and perhaps equally importantly, the actions that people can take to position themselves to take advantage of this situation rather than, as Rick says, be taken advantage of. So thank you for joining us again on Liberty and Finance.
Well, thank you, Elijah's father. I am trying to be helpful.
Excellent.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for March 25th through April 1st, 2024, while supplies last. First, we feature 2023 1-ounce Silver Krugerrands at $3.10 over spot. We also have backdated 1/10-ounce gold Canadian maples at $35 over melt with a minimum order of 4. And finally, we're offering our choice 1-ounce Palladium bars at just $119 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.